For enterprise organizations, managing all your food needs is a tall order. But with Easy Cater, you get a single workplace food vendor with the tools and resources to make it easy, giving teams across your organization an easy way to order from a huge variety of restaurants, all on one platform. All while consolidating your corporate food spend so you can control costs, streamline billing and payment, and simplify reporting. Easy Cater, your business tool for food. To learn more, visit easycater.com/podcast.
Introducing the all-new Adobe Acrobat Studio, now with AI-powered PDF spaces. Do more with PDFs than you ever thought possible. Need AI to turn 100 pages of market research into 5 insights with a click? Do that with Acrobat. Need templates for a sales proposal that'll close that deal? Do that with Acrobat. Need an AI specialist to tailor the tone of your market report to sound real smart in real time? Do that with the all-new Adobe Acrobat Studio. Learn more at adobe.com/do that with Acrobat.
Your next product launch is coming fast. Don't let billing slow you down. Legacy systems can't handle usage-based billing. That means your team is stuck gluing code together, piecing through spreadsheets, and running ad hoc queries just to figure out what to bill. With Metronome, you can roll out new pricing in minutes instead of months, whether it's usage-based, seat-based, or a hybrid model. Visit metronome.com to see how companies like OpenAI and Anthropic launch billing as fast as they launch products. That's metronome.com.
Bloomberg Audio Studios. Podcasts, radio, news.
This is a breaking news update from Bloomberg. Instant reaction and analysis from our 3,000 journalists and analysts around the world.
Big drop of earnings, as we mentioned. Really, 3 of the Mag 7 reporting. You've got Microsoft down about 3.5%. Let's just round it up here. You've got Alphabet. It is up about 4%. So pressure on Microsoft, a rally in Alphabet. And then you've got Meta right now. It is dropping in a big way. Tim, we've got that, down about 6% here.
Yeah, so long-term, Meta says it expects a significant reduction in our U.S. federal cash tax payments for the remainder of 2025 and future years due to the implementation of the One Big Beautiful Bill Act. But they reported net income of just $2.71 billion. That was a huge drop from last year. The company says that number would have actually been $18.64 billion if not for a one-time non-cash income tax charge of $15.93 billion. I want to know.
I don't understand it.
So, well, it's a one-time charge.
I get that.
They're paying it now.
Okay.
It reduces net income to something that looks way below what everybody thought it would be.
What is this charge, though?
That's a question that we're going to have to ask Ivan Feinseth, and why investors were not expecting this.
Because it's not like taxes changed from the year before.
And why is Meta the company that has this hit and not these other companies?
That's what I'm saying. Like, I understand the big, beautiful,
Bill Act
is going to change their tax situation going forward.
But why the one-time hit right now?
But exactly. What changed from the previous year that we're seeing all of this? So,
and they were very clear. It seemed like they wanted to be very clear in their communication. There was like this paragraph devoted to this in the earnings release, just below Mark Zuckerberg's commentary.
Right.
The street is not buying that right now.
I will also say that, our Kurt Wagner's pointing out, here we go from the release, our current expectation is that capital expenditures dollar growth will be notably larger in 2026 and 2025. I have to say that was one of the things I was looking at in terms of their expenses and so on have gone up about 32% year over year. And if they're looking at spending even more, maybe there are some concerns again about the spend, the AI spend, which many say you need. You got to get ahead of all of this to meet the demand. But will that ultimately pay off?
Yeah, and let's put some numbers there. $66 billion to $72 billion as of June. That was the 2025 CapEx guidance for the year. Things have tightened a little bit to $70 billion to $72 billion. It's coming in at the high end of the original range. But if that's what it's going to be for this year, and then the company says CapEx dollar growth will be notably larger in 26 than in 25.
Right.
How much bigger than $70 to $72 billion is it going to be?
Exactly. Plays to the spend. I will point out third quarter ad revenue. That was a beat, $50 billion versus the estimate of $48.59 billion. If you recall, last quarter, we got to this and we saw how the company was monetizing the AI spend. So there are still some more questions to be known. Again, I'm just going to pull up Meta here in the aftermarket, folks. It's down about 6.6%. Let's also talk about Microsoft, because this one also under pressure, Tim. It's down about 3.5%.
Yeah, first quarter revenue did beat estimates. Microsoft reported revenue for the first quarter or Azure and other cloud services revenue ex FX for the first quarter that beat the average analyst estimate. Here's some numbers. $77.67 billion, that beat estimates of $75.55 billion. That was for the first quarter. Earnings per share came in at $3.72. Operating income came in above estimates at $37.96 billion. That beat estimates, Carol, of $35.1 billion.
All right, let's see if the growth rates, though, is what, or it just seems like the investors are a little disappointed. As we said, the stock down 3.5% here in the aftermarket. What?
The guidance on the call.
Yeah, that's true, right? And we'll find out the outlook. This stock, keep in mind, is up almost 30% year to date here in 2025. Let's head out to our Chicago News Bureau. That's where we find Bloomberg Intelligence Senior Technology Analyst Anurag Rana. Anurag, we wanted to give you a little time to stew over this. Walk us through what we've got so far from Microsoft, because investors seem a little disappointed.
Yeah, I mean, I don't really find a whole lot of mistakes in these numbers. And you look at Azure growth of 39%. I mean, given that size, that's pretty good. The margins actually stood out way higher than what we were anticipating. We thought there was going to be pressure on margins because of all the spending. And then lastly, when you look at the capex number, substantially higher than the 30 billion that they talked about. Now, to some people, maybe that's a disappointment, but for us, that's a good thing, because I think they have so much demand coming in. They're going to add more capacity this year, and that's something that we have been saying for a while.
I'll ask you the same question that I asked Angelo Zeno a little earlier, and maybe it's too early to tell. Maybe we won't hear anything about it on the call, but the cloud race between the three biggest providers out there, AWS, Azure, Google Cloud, is there an opportunity for Azure to get market share from companies that might have been affected by last week's AWS outage? Is that an opportunity?
Well, typically I would say no, because they are facing the same problem today, frankly. So when you look at some of these large install bases, it's very difficult to change your applications. But what is the big opportunity, not just for Amazon or not just for Microsoft, but for all of them, including Oracle, is most companies eventually will have a backup cloud provider. They don't have it right now, but that is going to be one of the bigger growth drivers down the road after the AI boom is done. So, I mean, from our side, the market is big enough for all of them to prosper very, very well in the coming years. I mean,
Anurag, as you said, the Azure Cloud Computing Unit posted a 39% revenue gain in the quarter when adjusting for currency fluctuations. That did beat the street estimate of 37%. I'm reading some, analysis that says, well, that was a disappointed. The expectations were high. What was there a whisper number in terms of growth on the street?
No, the consensus was 37. This is what the company said. Okay. Now, if you really want to dissect it, badly, then you could say, well, Google Cloud growth accelerated in the quarter compared to the previous quarter. For Microsoft, it was 39. It's still at 39. But there are different bases. That one's, Microsoft is running at about 75 to $80 billion in annual run rate. Google Cloud is still at 30%, and yet Azure growth is higher than Google's cloud growth. So I think people are probably just splitting hairs at this point.
Yeah, and you referenced that when you were answering my question. You referenced the outage that Microsoft has having right now, this global Microsoft outage. So we should note that, just cloud companies are cloud companies, and sometimes it's AWS that has the outage, sometimes it's Microsoft that has the outage. Hey, the OpenAI question. We talked a lot about this with you yesterday, and I imagine that on the call, investors will have a lot of questions about, this close to 30% ownership of OpenAI, the parent company of ChatGPT. What is that going to do for Microsoft?
See, I think from our side, the equity part is not what, for our concern. It's really the technology that Microsoft is holding on to. That's really the critical piece, because, one of the ways we think about is they will sell more products. They will sell more cloud services using that technology than they would just on the, share side of it. And that's a bigger thing for us, because they have, a hold of that for the next 7 years.
Hey, one of the things I want to ask you, and I know this isn't typically your coverage, but you're smart and you cover all things technology. But Meta down almost 8% here in the aftermarket. As you see this, what's this one-time tax charge? I guess we're still trying to figure this out. But is it all about that, or is it just that we were caught off guard?
See, I think that could be a lot of the noise than the number, and I'm very sure they're going to give clarity on that. But the big question or the overhang on Meta always is, how are you monetizing AI? You're spending all this money. Where is the revenue you show for it? I think that's where management really needs to give and address that in a much more succinct way than they have. The other side is they don't have a cloud platform, just like Google does or Amazon does or Microsoft does. So Meta is the one that needs to explain these things far better than, frankly, the other three.
I want to bring in Ivan Feinseth, Research Director and Chief Investment Officer with Tigris Financial Partners, got over $500 million in assets under management, and pose that same question to him about Meta Platforms. The company saying that the implementation of the One Big Beautiful Bill Act led to the recognition of a valuation allowance against our U.S. federal deferred tax assets, reflecting the impact of the U.S. corporate alternative minimum tax, the result of one-time non-cash income tax charge of $15.93 billion. Shares Carol down 7.8%. Ivan, you've had some time to dig into this a little bit on the Meta Platform side. What's going on here?
Well, all right. So the big, beautiful bill caused the recognition of a deferred tax asset. It's actually a non-cash charge. And while it caused a spike in their tax rate to 87% for the quarter, it actually goes down significantly going forward. I think this is really a non-event. It's an accounting issue. And I think any weakness is a buying opportunity in the stock because there's so many positive long-term trends that will continue to drive the stock higher.
But is that why the stock is down right now? Because of this one-time charge affecting the bottom line? Is that the concern? Or is it what Carol brought up, the idea of CapEx going up next year?
And the spend.
Well, no, we have seen investors make a mistake consistently in selling Meta platforms on capital investment increases. They continue to invest in driving their AI capabilities, which drives increased user engagement. It drives increased return on ad spend investment. So I like when they continue to invest. And we've seen this multiple times. If you listen to what Mark Zuckerberg does every time he invests from the beginning, from changing the company from Facebook to Meta, and when he was investing in mobile, the stock sold off. Now, most of the people engaging in Facebook and Instagram do it on their phones. So you have to listen to him. He says what he does, and he does what he says, and he continues to create value. So on any weakness over the increase in CapEx, and again, this is positive, because there's been a fear that we're going to see this AI bubble burst, that companies are not going to continue to invest. We've seen all three companies reporting today, Alphabet, Microsoft, and Meta, all increasing capital investment in AI development, and that's positive for the companies, those three companies, and it's positive for the bullish AI investment theme.
This 15% corporate alternative minimum tax. Yeah, I'm Googling some stuff here, folks, because I want to understand it. It came out of the Inflation Reduction Act of 2022, and it generally applies, I think, to corporations with an average annual adjusted financial statement income exceeding $1 billion over 3 consecutive years. Yeah, we're all going to be learning a little bit more about this. But Tim, you keep bringing up, why aren't we seeing this with maybe some of the other ones?
Yeah, why are we only talking about this with regard to Meta Platforms?
They may be one of the ones that has the largest deferred tax asset, and that has really to do with timing and expensing of things like R&D, as an example.
So, we're talking about a lot of things, and Ivan, we want to get, your view on some of the other companies that have reported. Anurag, we do want to ask you, though, what are you thinking that you're going to be looking for on the call going back to Microsoft, if you will, as we continue to see that one trading lower here in the aftermarket? Let me just pull it up on my Bloomberg, because we have seen some pressure here. The stock continuing, it's down still about 3.4%. What do you want to hear from this company?
I think the number one thing would be...
Let me get Anurag first. Forgive me, Ivan.
Okay. All right.
So the biggest thing for us is going to be, what's the back half of CapEx spending? The CapEx in the first quarter was very high, $35 billion compared to 30, which they guided to. We want to know, what is it going to be in the back half of the year? Are they going to slow down dramatically, or is it going to keep pace at where we are right now?
All right. Anurag, we know you've got research to write. We're going to let you go and look forward to reading that. Ivan, we want to stay with you for a little bit. We are talking with Ivan Feinseth, Research Director and Chief Investment Officer with Tigris Financial Partners. Anurag Rana, of course, our Senior Tech Analyst here at Bloomberg Intelligence. Ivan, other companies that reported, Meta obviously caught our attention. We just talked with Microsoft, or talked about Microsoft with Anurag. What's your take on what we got from them? Because that stock's down about 3% here in the aftermarket.
Well, right now we're in an environment of, people have been buying these stocks ahead of results. They sell into the results, but I still say that this AI investment theme is powerful, and the companies leading it are Meta, Google, and Microsoft, and you got to buy on any weakness. I want to hear from Microsoft about increased AI-driven application engagement and subscription increases, how users are buying and implementing and using Copilot. Of course, you want to see growth in all key categories like cloud, Azure.
Azure was up 39%. That's pretty good, right?
Phenomenal. And that's their big growth engine. And they have been announcing huge contracts. So has Google. Unfortunately, Amazon had that outage, which was disappointing, but didn't really set back the stock. But these are the growth drivers, the cloud-hosted AI platforms.
Yeah, I was surprised to see Amazon stock actually higher that day.
I know.
But I think it also speaks to the power of Amazon, and you got a good understanding of how much it has. Remember, the company is investigating outages. Microsoft is investigating outages of Office and game applications today also. So this kind of goes both ways. Ivan, on Microsoft, one more, and then we're going to get back to some more Meta platforms, I think. But a small 1.2% beat on adjusted diluted EPS on Microsoft. Everybody, the company does not give guidance in the statement. It does that on the conference call, or it's doing that on the conference call. Is it worth even talking about it without even having it? Oftentimes we wait for the call to get more information, but in this case, forward guidance coming from the call, it's kind of a moot point.
Well, the disconnect and the dichotomy that exists between companies and Wall Street is that companies plan for 1, 3, and 5 years, and Wall Street wants to measure everything on a quarterly basis. The guidance, it's somewhat important, but you wanted to see consistent growth driven by their investments in technology, the adoption and use of their technology that creates their competitive advantage. And those are the key things to look at. And we are in the first inning of the World Series of AI-driven global economic growth. And this trend is going to continue, and it's going to be powerful, and it's going to be game-changing. And I think that AI is going to enhance and create many more jobs than it will eliminate.
Going back to the cost thing, though, for Meta, I'm just looking at that operating margin, 40% for the third quarter, down from 43% last year. Is that worrisome, or you think manageable?
Not really.
Okay.
We've looked at companies that have had huge growth trajectories while their margins were contracting. In fact, Amazon doesn't focus on margin. They focus on revenue growth. They don't focus on return on capital, actually, which is one of the key things we focus on, but they do drive a huge return. So, there are times where your gross margin can contract, but your economic margin can increase. And that is the economic margin is the difference between return on capital and cost of capital. That is the most powerful driver of shareholder value creation. So it's not so much important about what happens with gross margin. In fact, I've seen many companies drive huge growth by lowering their growth margin because you're just becoming more competitive, and they're actually making it up on return on capital.
Okay, we're going to talk about Alphabet with you in just a minute. Carol reminded me that shares are surging higher in the after hours.
6%.
6%. Okay, one more on Meta platforms, down 8.4% in the after hours. Reality Labs, losses for the third quarter, $4.4 billion. It's about the same as 1 year prior. Obviously, it's a huge investment area for Meta platforms. In the press release, Mark Zuckerberg specifically calling out the success of the eyewear and saying, essentially, I don't have it in front of me, but he essentially said, if we think the future is going to be what it is, this is going to be the most exciting moment for Meta platforms ahead of us. These will be the most exciting years for Meta Platforms. What is the opportunity that Meta Platforms has when it comes to eyewear?
This is going to be a tremendous communication and interactive platform, and it's only going to get better. In a few years, we're going to look back on these original glasses, the ones that they've launched from Ray-Ban, the recent ones from Oakley, and the functionality in a few years from now is just going to be more and more incredible. But this ability to engage with real-time information, to share pictures and images and videos in real time with other people that you're talking to. And while Mark Zuckerberg believes that the glasses are going to replace your smartphone, you're just going to keep your smartphone in your pocket, and you're going to interact with data and information and people who you're communicating with these glasses. And eventually we're going to see, once that Meta just launched ones with displays, it's going to be all about having displays embedded in the lens, so you don't even have to touch your phone. So this is going to be a huge growth opportunity. This is going to be what the cell phone was in the mid-90s.
No rose-colored glasses though right now, because Meta shares now down near their lows in the aftermarket, down about 9%.
I'm going to remember that. Ivan said this is going to be what cell phones were in the 90s. And by the way, he's not wearing any Meta glasses right now.
Well, and I will say our Mark Gurman really, really likes them as well. Hey, we do have to ask you about Alphabet, because we are seeing this one actually up about 6% here in the aftermarket. What do you like? What's of note, do you think, in their release?
Cloud growth, big cloud contract wins that they've had over the past few months with Meta, with OpenAI, with other companies. That Meta, Amazon, and Alphabet, Amazon, and Microsoft are building the AI and cloud infrastructure that everybody is connecting to and going to continue. And increasingly coming are going to be connected cars as we move through to full autonomy. So we are going to need high-speed, real-time, constant connectivity to the cloud. And those are huge opportunities for the three major public cloud service providers, Alphabet, Google, and Microsoft.
Well, and they're spending big. They're now seeing fiscal year CapEx 91 to 93 billion. They had seen about $85 billion. So, hey,
you got to spend money to make money, Carol. You got to spend money to make money. That's what they say.
It's wild, right? Like the number. They also, Gemini, their app now has over 650 monthly active users.
650 million?
650 million. Okay. Yeah. Didn't I say that? It's a lot. How do we know that this AI thing, how do we know that all this spend is going to pay off, Ivan? Are we still a little exuberant?
Well, because the functionality we see today is going to be blown away by the functionality in the future. More and more people are going to rely on this technology for all different aspects. And I do give credit to Tom Siebel, the founder of Siebel Systems and C3 AI, that I believe he said it, that every company is going to be an AI company. Every company is going to use AI on all aspects of their business, whether it's to manage supply chain, manage pricing, target marketing, that the functionality is going to increase and people are going to use, just like you said, when you wanted to understand more about Meta's tax charge, you Googled it.
Yeah.
And we're going to get more information. I did also. I like Perplexity. I looked it up in Perplexity. I did understand what they said, but it gave me a little more detail. And
you know it's right, Ivan? You know it's right?
Yeah.
Is it right?
Do I know
what Perplexity gave you back is right?
Yes. Well, because I do understand that the tax that it's really the timing and of managing your tax payment and your tax liability that you tend to offset through capital investment, through R&D and other types of things that happen. So it's really timing issues on how your accrued tax liability or your accrued tax asset falls versus the taxes you will eventually have due or the tax credit you will eventually earn.
I just want to know, is this Sora? Is this really Ivan Feinseth? I just want to make sure.
It is really me.
Listen, perfect guest to talk about all of this. So much coming at us. Ivan, thank you so much. Really appreciate it. Ivan Feinseth, Research Director, Chief Investment Officer over at Tigris Financial Partners, over $500 million in assets under management as of the middle of this year, joining us right here in New York City.
How many vendors does it take to meet all your organization's food needs? Just one. EasyCater, the workplace food platform that lets teams order from a huge variety of restaurants, over 100,000 nationwide, all through a single vendor. In addition to all that variety, EasyCater also gives you full visibility of your organization's food spend with invoicing, centralized reporting, and seamless integration with expense management systems, all on one platform. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast. Hiscox Small Business Insurance knows there is no business like your business. Across America, over 600,000 small businesses, from accountants and architects to photographers and yoga instructors, look to Hiscox Insurance for protection. Find flexible coverage that adapts to the needs of your small business with a fast, easy online quote at hiscox.com. That's HISCOX.com. There's no business like small business. Hiscox Small Business Insurance.
Running small and medium-sized businesses is hard work. Business owners need to be sure that their ads are working just as hard as they do. Amazon Streaming TV Ads helps put small and medium businesses front and center on premium content and shows that people are already watching. With Amazon Ads, you don't have to sacrifice relevance for reach. Trillions of browsing, shopping, and streaming insights help you reach the right audience. And measurement tools show you what's working the hardest to help you optimize your campaign in real time. Gain the edge with Amazon Ads.